So you own a portfolio of rental properties, or maybe even just one, but I am sure the thought has run across your mind from time to time of, is it time to sell this property? Maybe you heard the market is absolutely on fire, it's a great seller's market, and you're just wondering, does it make sense to cash in on this, pull out your equity, and move on to something else? Today, I want to help you analyze and break down exactly what you should consider when it comes time to thinking about, is this the right time for me to sell my investment property? So today we will break it all down, give you some strategies, some things that you should be looking at, some numbers you should really be looking at to make sure this is the right decision for you before you move on. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we get into today's video, make sure you take a minute to hit that like button, leave us a comment below, and don't forget to subscribe so you don't miss out on future videos. As always, I'm here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. Before you rush into selling that property because the market's hot or because you need to access some of those funds, you should really consider some things to make sure that you're making the right move, because you don't want to move on from a property and look back in the past and regret your decision. You really need to evaluate the numbers, make sure it's the right decision, especially if you have multiple properties and you do need to get out of one of those and pull some cash out. Then you're going to want to run some numbers to evaluate which one makes the most sense. Not necessarily which one has the most amount of equity or which one has appreciated the most, but you want to look at everything to make sure that you are removing the right property from your portfolio to get those funds. So today, we're going to break it all down. Number one, you should look to see if this home is still fitting your current financial goals. You should be taking an overall look at this property to see how much has it appreciated since you made that purchase. What is that looking like in regards to the other homes in your portfolio? Is it outperforming on the appreciation side? Maybe you should look at something different. Take a look at your cash flow. What is this property cash flowing you per month? Is it in line with the goals that you set when you got into this business? And let's face it, you've probably changed your expectations as you've moved throughout the process. We all know that we set these lofty goals when we first get into something, and then reality sets in and we realize, hey, that wasn't the right move initially. You know, we all get into it and go, I want $2,000 a month in cash flow per property, 10 properties gets me 20 grand, let's go. But you realize as you go through it, that's not always possible. And so you may have changed some of those expectations. And so now you should take a look at, does this property still meet my expectations? You may have scaled back some of those expectations, but now you want to take a look to see, does it still fit with what you're looking to accomplish within that portfolio? So take a close look at those numbers, appreciation, cash flow, how it's performing. Does it fit those expectations? If it does, you probably should hang on to it, or maybe consider moving a different property off of your portfolio. But when it comes to looking at that entire portfolio of properties, this will help you analyze which one makes sense to sell. And if this is just one for you, think back to the initial goals that you set as a real estate investor. Does selling this property make sense for you to get to your financial goals that you set initially? Chances are, if you were trying to create passive cash flow, passive income, it may not make sense unless you've got other plans in place to invest that money. The next thing you should be looking at is the property's overall performance in your portfolio. So we did just look at appreciation and cash flow, but now it's time to take a look at your vacancy rates, your repairs and expenses that have come along with the property. Is this property costing you a ton of money? Maybe it's set up to make you $1,000 a month when we're looking at your rental income minus your monthly mortgage, but by the time you've made repairs and you had to replace an AC unit and the roof needed to be replaced and you've got yard maintenance going on and all sorts of problems are popping up with the property, maybe at the end of the day, this property is not actually making you any money. So you should be evaluating those expenses to see, are they adding up? Sometimes the month-to-month look isn't always the best, because ideally it should be making you $1,000 a month, but when you span it out over 1 year, what does that actually look like? Run a full profit and loss per property. I have my accountant run that per property for me so I can see which ones are performing well. And hey, when the time comes to sell, I've got an easy choice because I can just pull up that property profit and loss statement and make a quick decision. You should also continue to look at those vacancy rates. Maybe this property has been sitting vacant for some time. It doesn't rent out well. It's turning tenants over because it's an undesirable location, or maybe problems with the repairs that you've found within the home. So take a look at those vacancy rates. And again, that should shake out for you on your profit and loss statement as you're looking at those numbers. But if you're having trouble renting the property out and it sits vacant longer than it needs to, and it's costing you money every single month, then yes, maybe it is time for you to move on from this property and reinvest in something else, but only taking a long-term view and backing out to look at that year-long statement is going to give you a clear picture there. The next thing to look at is portfolio diversification. So you should be taking an overall look at your portfolio. We've broken down the numbers individually, but is your portfolio diverse enough? So maybe you've got a ton of long-term rental single-family homes, and maybe that's your goal, is just to invest there, but I always encourage you to diversify your real estate investing. You should dabble a little bit in the long-term space, in the mid-term space, in the short-term space. Maybe get into some commercial properties, and as you continue to go along this process, you should be building that portfolio up and diversifying, because let's face it, if all you're doing is long-term rentals and things shift and rents go down, so does your profit margin, so does the money you're making every single month. If you're invested in commercial space and in residential space, those two typically move in different fluctuations. So one could be making a ton of money while the other one is taking a hit, but you're breaking even on it essentially because of the diversification. So take a look at your portfolio diversification, and maybe you've got a bunch of those single family long-term rentals. Maybe it's time to just convert it into a midterm rental, throw some furniture in there and bring in a traveling nurse or somebody to occupy that unit and bring up the income to a level that you're comfortable with. You don't always have to sell it to go make more money. Sometimes you just have to think, is there something I could be doing with this property instead? I've even talked with some people that have taken their long-term rentals and turned them into skilled nursing care facilities. And those things make a ton of money, and all they had to do was shift their mindset. So if you ask your realtor, he's probably gonna tell you, yeah, it's time to sell, right? There's commission in it for him. But a true real estate investing entrepreneur and realtor should be able to help you identify areas of opportunity for your property. Could it be converted to something different? Could you do something different with it to diversify that portfolio and bring in the income that you're looking for? And maybe sometimes it does make sense in this case to sell it so that you can then diversify your portfolio. Sell that property off, do a 1031 exchange, and put that into something commercial or into an industrial building or a retail center or something different than what you've been doing to just keep yourself diversified. The fourth thing you should consider is future potential for the property. You should always be looking at your portfolio to say, is a large company moving in? Then I can expect rents to go up. Is a large company moving out? I can expect rents to potentially go down. Are things changing within the city? Are laws changing? Maybe you have a short-term rental or a bunch of short-term rentals in your property portfolio, and you see that changes are coming in your area to get rid of short-term rentals. Yes, it does make sense at that point to potentially sell that property or switch it over to a different type of rental if the numbers make sense. So always be looking at that future potential. What is the appreciation factor? Maybe just because it's not hitting those cash flow numbers for you right now, maybe you're just killing it and crushing it with the appreciation numbers. And those are just things that we don't see sitting in front of us all the time. So you should be evaluating your portfolio on at least a quarterly basis to figure out where you are with appreciation, which homes are performing well on appreciation. And I've got a whole spreadsheet of all of my properties that breaks all of that down. I know how much debt I've got on the property, how much equity I could tap into if I needed to get a HELOC or something like that. I basically have all that information at my fingertips, and I update that every single month so that when I open that spreadsheet, I know where I stand with each of those properties. And the ones that are appreciating really well, if they're not cash flowing that well, it doesn't really bother me. So make sure that you are taking a look at the future potential of that property as well. Maybe rents will be headed up. Maybe things are going to change. That might not be the property for you to sell, and maybe you need to evaluate a different strategy. Number 5 is to look at your financing considerations. So maybe a property has a really high interest rate currently and rates are down, and you should take advantage of that. there you could absolutely consider a refinance, but maybe there's some opportunity for you to cash out of that one and go buy multiple properties with lower interest rates using a 1031 exchange. We should always be looking at the loan on that property, because the reality is when you first buy that property, you're paying a ton of interest up front and the principal isn't moving as fast. But once you've owned a property for a number of years, 3, 4, 5 years, you start to pay a ton more down in principal. And if you've got a tenant paying that for you, then you're making a ton of headway in paying that property down. So take a look at where you are on the amortization chart and see if you've been paying a ton of interest or if you're really starting to pay down some of that principal. That could weigh really heavily on a certain property, because now you're chunking away big chunks of that principal, and even just another year of payments could really build up a ton of equity for you in that portfolio. So take a look at where the interest is, where the rates would be for a future purchase as you go to reinvest that money. Where are you on paying down the principal versus the interest with that loan? All of those factors should be weighed out before you jump into another property. Because if you're doing this every 2 years and you're just buying a property, selling it and buying another one, selling it, buying another one. If you're doing that every 2 years, you're wasting a ton of money in interest and you're getting absolutely nowhere. So it makes sense to hang on to it for as long as possible, but when the time comes to sell, just make sure that you're not giving up the property that is making the most in principal payments. And last but not least, you should take a look at current market conditions. So you've evaluated your properties, you've decided, hey, I've got a property that's not performing well, it doesn't align with my goals, financially it's got a high interest rate, it's not getting a ton of principal payment made to it currently, and so you've run through that entire checklist and gone, I think I'm gonna sell. The last thing you need to look at are the market conditions currently. Is this a buyer's market or a seller's market? If you're in a buyer's market, it probably doesn't make sense for you to put that up unless you absolutely have to, because you're gonna take a cut on the price. So you should just really be taking a look at, where are prices going in my area? What do interest rates look like? What does the buyer demand look like? How long will it take me to sell this home? These are all factors that you need to consider before you actually put it up for sale. And conversely, then you need to go, I'm going to need to reinvest this money unless I'm going to take an absolute hit on the taxes. Where am I going to reinvest it? Does it make sense there? And the reality is, when you're dealing with a buy and a sell, you're either gonna sell in a seller's market and then have to buy in a seller's market, or you're gonna sell in a buyer's market and then you get the opportunity to buy in a buyer's market. So when it comes to looking at those, if you're going to just shift assets from one real estate asset to another, that part doesn't play a huge factor for you as long as you're not going negative in equity or having to write a check to get rid of that property. So evaluate what the conditions look like, see if it makes sense for you. Hey, if it's a hot seller's market and you're gonna take some time to go identify another property via a 1031 exchange, maybe the market shifts a little bit and you're able to time things up to where it makes sense for you to make that move and make that sale happen. So just make sure that you are paying attention to what kind of market we are in, know that going into it, and that's going to help you run those numbers most accurately once you've run through that entire checklist and decided that you wanted to make that move as far as selling your investment property. Now you'll know what those market expectations look like, and you can really make sure that you've got a solid look at the numbers before you jump into making it happen. Just a final last piece of advice, and I alluded to it in one of the earlier points, is if you call and ask a real estate agent, is now the time for me to sell my house? I promise you, 99 out of 100 are going to tell you yes. There's commission involved in it for them. So make sure that you run this list on your own. You've got all the details that you need at your disposal. The only thing you may need help with from a real estate agent is, what do the market conditions look like? And those should be the questions you're asking, not, hey, I'm thinking about selling my property, what do you think about it? It should much more be, hey, what does the actual market look like right now for a buyer, for a seller? Who's getting the best deals? What does it look like? So ask those questions. Don't just ask, should I sell my home? Because again, they're going to jump in and tell you yes. That's it for a breakdown on the 6 things you should consider before selling one of your investment properties. Take a look at each of those categories before you make that decision. Make sure it checks the boxes there. Maybe it hits 5 out of 6 or 4 out of 6, and that's good enough for you to make that investment move and move those funds over to something different. But hopefully you found today's content helpful. If you did, be sure to hit that like button. Leave us a comment below about any questions you might have. And as always, be sure to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. We'll see you next time.